Welcome back to my YouTube channel. In this unit, we will be looking at the accounting cycle and source documents. First, we'll look at a simple illustration of the accounting cycle. On the diagram, you'll see the accounting cycle starts with a transaction, goes from that to analysis of source documents, then to journalizing, then posting to ledgers, and then you do a trial balance, and then you prepare your reports, and you make analysis of those reports, and then finally you make decisions based on the analysis of the reports. Now we'll take a look at the accounting cycle in more detail. This accounting cycle is done in the form of an organizational chart, but how this one needs to be read, it needs to be read from bottom up. So start with your transactions, whether the purchasing of fixed assets or sale of fixed asset or paying for stamps or taxi fare or refreshments, assuming that those expenditures relate to the business, right? So you have the transactions that will result in getting a source document. Examples of source documents are invoices, receipts, and petty cash vouchers. And then from source documents, you move into the books of original entry. So source documents, information from source documents will go into the books of original entry. And then after being journalized in the books of original entry, they'll be posted to ledgers. And the ledgers there, based on the diagram, sales ledger, your general ledger, and your purchases ledger. And then from those ledger accounts, a trial balance will be extracted. And then from the trial balance, the financial statements would be prepared. In this example, the financial statements to be prepared is a trading and profit and loss account, otherwise referred to as the income statement, depending on the text that you use or the particular business, right? And your balance sheet. And from those financial statements, we will make decisions based on the analysis of those statements. Next, we'll zero in now on the source documents. What are source documents? Source documents are the documents that provide information to put in the books of original entry, and from the books of original entry to be posted to ledger accounts. Now, examples of source documents are your purchase order, invoices, receipts, debit notes, credit notes, and your petty cash voucher. So your purchase order. This is a document prepared by the purchaser, and it contains details of goods and services required by the business. The purchase order is prepared detailing items and or services that is required by the business, right? So that needs to be prepared and sent out to initiate the transaction process. We move to an invoice. What's an invoice? Invoice is a document prepared by the seller and sent to the purchaser whenever a business buys goods or services on credit. Primarily, invoices are relate to goods or services that are being traded on credit, primarily, right? It gives details of the supplier and the customer and the goods being purchased or the services being provided and the attendant cost for that service or goods. Next, receipts. Receipts are documents acknowledging the receipt of money for goods and services rendered. A receipt should be issued as soon as payment is made, right? So that's a receipt. So a receipt after the goods would have been provided or the service provided, and the recipient of that goods and services would now pay for that goods and services. After the goods and services would have been paid for, then that client is supposed to receive a receipt as evidence of payment for that goods or services. Next, debit note. A debit note is a document sent to the buyer when he or she has been undercharged on the invoice. This facilitates the buyer's debt being increased. Debit notes also refer to documents prepared by purchasers to indicate that suppliers' accounts have been debited, while your credit note is used as a document for returns. It is sent to the customer showing allowance given by a supplier in respect of unsatisfactory goods in the first instance. So other reasons for the issuing of a credit note might be wrong goods supplied, the goods were lost in transit, the goods have been damaged but not returned to the seller. Instead, an allowance was given, right? Faulty manufacturing of the product, and there was an incorrect pricing, or there was an overcharge on the invoice, thus necessitating correction on the invoice. Now we'll look at petty cash voucher. A petty cash voucher is a document used when requesting payment for a small item of expenditure incurred on behalf of the business. The form details the expense and should be signed off by the duly authorized accountant that is responsible for the petty cash. So the items that may require the use of petty cash vouchers may be the purchase of stamps, the purchase of pens, might be the need for a taxi to run an errand on behalf of the business. Since it's a small expenditure can be taken care of with the use of petty cash. The key thing about the petty cash is that it is a set amount of cash to be expended for small items to be decided by the business, right? So it could be, for instance, $10,000 or $20,000, depending on the size of the business and the nature of the operations. So there'll be decision by the management team that the petty cash for the month is $10,000. So anything that can be taken care of in terms of small expenditures that is less than maybe $1,000, or there would have to be a cap. The key thing, there would have to be a cap in the expenditure particular to an individual or a department, depending on the size of the business. So the expenditure has to be capped, like to say no more than $2,000 per department or person to take care of small expenditures. So the $10,000 for the petty cash would be regarded as a float to be replenished monthly with the amount that was spent. So if $9,000 was spent out of the $10,000, then the petty cash would be replenished by $9,000 in order to bring it back to the float of $10,000 for the month. So that's the purpose of petty cash and petty cash vouchers. If you found this presentation useful, then please like, share, hit the notification bell so you know when the next video is out. Please leave a comment in the comment section